Anand joins in to talk about all that's transpired and how one should be approaching the market. Hi Anand, afternoon, good to see you in. What's your mindset now with respect to the market after so much of a pullback that we've seen and the talks of a 50 basis point rate cut, etc.?
Well, the pullback, I think, is more a reaction of the fact that there is nothing really now left to worry about, at least internally. Everything that could possibly gone wrong has gone wrong. So, even a little bit of buying will take the market up. However, in the last couple of days, I think there is a false premise being built up that, we have to absolutely ensure that the RBI cuts down the interest rate. We are looking here at, again, logic being replaced by hype and hyperbole rather than, trying to figure out why one should be looking at an interest rate cut. So, on the one hand, we argue that, rupee is under pressure. So what would you logically do? Raise the interest rates. But hey, no, you should reduce it. Inflation is still rocking. So what you should do is reduce the interest rates because that will increase inflation. We have supply side constraints. We don't have land to grow. We don't have people who are willing to work at a reasonable wage, and investments are down. So what we should do? We should cut interest rates. So I don't understand the logic of everybody just looking at interest rates and saying, hey, India has suddenly reduced its savings growth. Savings rate which used to be 35-36% is now closer to 30%. So we should penalize the saver even more. Let's reduce the interest rates. So we have an amazing chorus that has gone together saying that, the only single point agenda that is on everybody's mind is cut the interest rate. I see no logic for it. And I think, if logic continues to determine RBI policy, you should not see an interest rate cut on Monday, in which case some of this fizz will move out.
Anand, you didn't speak about the big risk which is on Sunday. What are you expecting in terms of the Greek elections, and what do you think will be the best case scenario for our markets post the Greek elections? Will it be positive if they stay in the Eurozone or exit the Eurozone?
So I don't know if there is any alternative to Greece and for the moment many other parts of Europe actually moving out of Eurozone. There is no Eurozone anymore. Clearly, if attempts are continued to be made to keep Eurozone as one area, Germany will start to feel increasing pressure. I think the German bond yesterday already gave you an indication that if Germany was to become the economy which is going to backstop everything else in Europe, well then Germany itself is going to pay a fairly high price. Now the question is whether or not the banks are willing to take the hit, and I think we will continue perhaps to make some more futile attempts like we just did in Spain to try and kick the can down the road. But I don't see that that's going to make much of a difference going forward. However, the difference is that while most people think that a breakup of Eurozone will be bad for India, in my view that isn't so. At the end of the day, what you're really looking for is cheap money to come back in, and cheap money can only come back in despite attempts by a government to keep it out through complete policy inaction, by making sure there's a heck of a lot of money floating around, and which is exactly what's likely to happen if Eurozone breaks up. You'll have 5 more currencies to worry about. Most of them will be looking for places to move into. And at the end of the day, we are still a country which continues to require capital and can absorb large amounts of it. So, by default, willy-nilly, you will find capital coming in. So I don't really see the big brouhaha about why a breakup of Eurozone will be bad for a country like India. Of course, in the near term, there will be some panic and therefore there may be a move down, but I would buy that move down.
Coming down to individual stocks, what would you be doing now? Case in point, the auto sector that's seen, a cool off today. There are expectations of an increased excise duty on some of the diesel cars, etc. Would you buy into the dip that you're seeing in autos, or would you stay away, being cautious of some policy action there?
So unfortunately, the macro view and the micro view are difficult to reconcile right now. Like I said, at the macro level, I would think that India is a buy. At a micro level, only because there is nothing left worse that can happen worse than what we already are. At a micro level, however, it becomes difficult to try and forecast how a company can do well in the kind of gloom-doom that prevails all around. So, very briefly, should the government increase excise on diesel cars? Absolutely. I think that's a no-brainer. The fact that they haven't done it tells you how strong the industrial lobbies are. Will that reduce demand for diesel cars? They should. And hopefully they will. Will that mean that you should be buying auto companies? Well, it depends. You don't go out and buy those which make diesel vehicles. You perhaps continue to nibble at the lower end of the curve, which is essentially two-wheelers. And right now perhaps trucks are not going to do too well either. But at some stage, if and when the cycle turns, or at least the freight rates come up again and there's more activity, then I think trucks will continue to do reasonably well, because you aren't going to get any excise increase on trucks at least. So you have to be selective, but I think somewhere two-wheelers seem relatively safe.
Anand, the other big sector which is being spoken about today is aviation. We're getting a mixed bag of statements. SpiceJet, which is saying that they're possibly in talks with two PE players at this point in time. KFA, which has apparently spoken to the management internally and said that FDI in aviation is something that they would take advantage of. But then we had the Emirates management also in an interview today saying that FDI in aviation might not be enough for them, and they would like full operational control if in case they do come into the Indian markets more aggressively. How exactly would you approach FDI in aviation, one, and two, the aviation sector as a whole?
The good thing about aviation is that you can sit in the plane and fly, but why would you want to own the damn thing? At the end of the day, aviation nowhere in the world has added any significant value over a long period of time. It's an extremely cyclical industry. Now in India we have our own set of problems. While we argue that aviation is something which is taxed overly, and perhaps it is, you have to remember that today, for example, ATF fuel is actually cheaper than petrol for a car. So you can fly a jet cheaper than you can run your car to your office. But that said, just allowing somebody to come and buy stocks not good enough reason for anybody to come and buy it. It's not as if people are waiting by the truckloads to come in and buy equity in something that the government of India deigns to allow them to buy. The fact of the matter is that it's a sector which is under serious stress. The costs are already too high. Airport tariffs are going up, which makes it more and more unviable. All of that is getting passed on to the consumer, and consumer traffic has to eventually fall, and none of the companies are really making money. So for someone to come in and buy equity at this stage, one has to have either very deep pockets and a hole to burn, or you are really assuming that at some stage some sanity will happen which will allow the sector to actually grow, and the government will shrink its expenditure and therefore allow it to reduce taxes. You need to be a really positive kind of thinker for you to assume that. But I guess that's what happens when you're looking at FDI.